What's up, everybody? Welcome to Heresy Financial. Earlier today, I posted a video that was mainly about the precious metals sell-off. So if you haven't seen that, you can go back and watch that video if you are interested in my analysis on what happened today in the precious metals markets. But in this video, we're looking closer at the equity markets and looking at why it shows that Ray Dalio's holy grail of investing is more important than ever in today's economic environment. Ready? Let's dive in. So today, the equity markets are up a massive amount, specifically the Russell 2000 small caps, and the S&P 500 is up as well. But interestingly, the NASDAQ is basically just kind of sputtering along. There are a lot of large tech companies that did not do very well today at all. And again, like I mentioned in my last video that I posted earlier today, precious metals got hammered, and Bitcoin's just kind of fluttering along, no real movement today, down about 2%, but for Bitcoin, that's really not that much. That's basically a flat day. Now, in the intro, I talked about Ray Dalio's holy grail of investing, and this is what he describes as diversification, but it's different than what most people think when they hear diversification. Diversification doesn't just mean spreading your bets around. True diversification can only be achieved if your bets are non-correlated. So this means that if you own 100 different stocks, but all of these stocks are part of the S&P 500, you really don't have much diversification going on because the correlation between the stocks that are a part of that index are almost one. They're very, very, very highly correlated. They move up and down together. And so to achieve real diversification, you can do it with just a couple of different positions as long as they are non-correlated in terms of how they move when certain economic conditions are changing or hit or time goes on. This is one of the reasons why Bitcoin has been pushed as an institutional investment over the last few years, because it really is a non-correlated asset. It doesn't really correlate with gold, doesn't really inversely correlate with the dollar, it doesn't really correlate with the stock market. Sometimes it's up a lot with those, sometimes it's down a lot compared against those, and so it really has no correlation, which can make it a nice piece of a puzzle for a portfolio if you're trying to achieve diversification, because on a day that stocks get hammered, whatever caused stocks to drop, that probably wouldn't have much of an impact on your Bitcoin. And vice versa, on a day where stocks skyrocket, 5-10% in one day, the Russell 2000 up 6% today as an index, that's huge, that's enormous. Bitcoin down 2%. And so true diversification can work against you, but it also provides a life raft for you. It preserves your portfolio. Now, this is why it's not smart to go all in on one single bet, because then your correlation is 100%. Your entire portfolio will live or die by the movement of one position. And the key to investing success long term is to be able to expose yourself to as many individual asymmetric bets as possible. If you just have all of your money in one or two investments that will both do well or die based off of similar things happening to them, then you don't have multiple bets. You only have one bet going. But if you have multiple bets that all have different conditions that will cause them to succeed or fail, and if they fail, they will only impact a small percentage of your portfolio, but if they succeed, they will impact your portfolio in a big way. That's the key to designing a successful portfolio long term. This is why I've talked about 5% being a potential allocation for a portfolio, because 5% would be enough to triple your portfolio value if Bitcoin does become adopted as money long term. But if it fails and goes to zero, your portfolio goes from 100% to 95%. And so it's an asymmetric bet. But the key is to expose yourself to as many asymmetric bets as possible. So over the last few months, the Russell 2000 has absolutely underperformed by a large amount, especially compared to the NASDAQ. Small companies have not done very well. And tech companies, a lot of them have doubled or tripled. So this has caused a lot of investors to say, why would I allocate any of my money to this index that is underperforming? I'd rather place my money on the fastest horse. Well, the problem with that is that the fastest horse can change at any time. And so having some of your portfolio allocated to small caps over the last couple of months has been a drag, but that's a non-correlated bet. The NASDAQ has been doing really well while the Russell 2000 has not. that. And now it's the opposite. The Russell 2000 is doing fantastic. So your small companies are performing. They're giving you a hedge against some of your tech companies that have been dropping right now. Now, 2 notes. If you're a long-term investor, all of this applies to you. And you're not really necessarily concerned about the day-to-day moves up or down. You want to construct this portfolio and then sit on it, because over time, it will decrease your overall portfolio volatility and give you the ability to expose yourself to multiple areas that will each do well over time and not have to reposition yourself constantly according to what you think might happen next. But this is not necessarily true for traders. If you're a trader and you take short-term positions, concentration is key so that you can ride out those momentum waves, and then being very quick to recognize when the momentum is moving against you and shift your entire positioning into a new thing. That is key. Now, if you've tried short-term trading and it has not worked for you, likely it's because you haven't been disciplined and you haven't stuck to a trade plan or to rules, and you've been going off of emotion or news articles. And these are very, very simple things to change, very simple fixes in order to increase your trading performance. If you'd like to try out a great software that helps you put together a trade plan, try TraderSync. I've got a link in the description below. It's an affiliate link, so I will get a small commission if you use my link, but it's a great software that helps you out, and they've got a free trial as well, so you can try it out to see if it works for you. As always, I really appreciate it. You guys are the best. Have a good day.